Have you ever thought about investing in real estate but felt it was out of your budget? Let's unravel this conundrum together. The dream of owning property, a tangible asset, is a common one. However, the common perception is that real estate investment demands a hefty bank balance. But is that really the case? Not necessarily. The realm of real estate investment is vast, diverse, and teeming with opportunities for those who dare to tread with a modest budget. First off, let's debunk the myth that real estate investment is the exclusive playground of the affluent. Yes, it's true that acquiring prime properties in cosmopolitan cities may require a considerable financial outlay, but the real estate market is much more than just luxury apartments and beachfront villas. Think about the countless suburbs and smaller towns where property prices are much more reasonable. Consider the potential of fixer-uppers, foreclosed properties, or even micro-flats. There's a whole world out there beyond those glossy real estate brochures, waiting to be discovered by savvy investors with an eye for potential and a mind for numbers. The key to successful budget real estate investment lies in understanding the market, knowing where to look, and being strategic about your investments. It's about making the most of what you have, whether that's $20,000, $50,000, or $100,000. Remember, in real estate investment, a modest budget doesn't have to mean modest returns. With the right approach, you can turn a small investment into a profitable venture. It's not just about the money you put in, but also the time, effort, and thought you invest. So if you've been dreaming of investing in real estate but thought it was out of reach, stick around. You might be surprised. This venture is not just about having deep pockets. It's about having a keen eye, a strategic mind, and the courage to take that first step towards your budget real estate dream. First things first, let's get a clear picture of what you can afford. Before you dive into the world of real estate, it's crucial to take a good, hard look at your financial situation. And no, we're not just talking about how much you have in your bank account right now. We're talking about your income, your savings, your debts, and your future financial goals. All these factors play a significant role in determining what kind of property you can afford. So, how do you figure out what you can afford? Well, start by calculating your net income. This is the amount you bring home after taxes and other deductions. Next, subtract your monthly expenses. Don't forget to include everything from your morning coffee to your car payment. What's left is your disposable income. Now, a good rule of thumb in real estate investing is to ensure your property-related expenses don't exceed about 1/3 of your disposable income. This includes your mortgage payment, property taxes, insurance, and any homeowner association fees. This way, you won't be stretching your finances too thin. But wait, there's more. When you're budgeting for a property, remember to factor in additional costs such as repairs and maintenance. If you're buying an older property, you might need to set aside more for these unexpected costs. And let's not forget about property taxes. These can vary widely depending on the location, so do your homework. Also consider the potential risks. What if you lose your job or face a financial emergency? Do you have enough saved to cover your property expenses for a few months? If the answer is no, it might be wise to wait a bit longer before investing or look for a more affordable property. In the end, it all boils down to being financially prepared. Investing in real estate is a big commitment, and you don't want to bite off more than you can chew. Making informed decisions based on your financial situation will help you avoid potential pitfalls and set you up for success. Remember, understanding your budget is the first step to successful real estate investing. Now that we know what we can afford, let's find some properties. Unearthing affordable properties requires a blend of strategy, intuition, and a dash of good old-fashioned luck. But don't fret. With the right tools and approach, you too can find the perfect property at the right price. First, online listings are a treasure trove of possibilities. Websites and apps dedicated to real estate can filter properties based on your budget and preferred location. They offer a convenient platform for comparing prices, checking out property photos, and even scheduling viewings. Just remember, these platforms are just the starting point. Always cross-check information and verify before making any decisions. Next, consider auctions. Properties end up at auctions for various reasons. Maybe a homeowner couldn't keep up with their mortgage payments, or a bank had to repossess a property. Regardless, auctions can be a gold mine for budget real estate. However, tread carefully. It's easy to get carried away in the heat of a bidding war. Set a maximum bid and stick to it, no matter how tempting it might be to go just a little higher. And let's not forget about foreclosures. When a homeowner can't make their mortgage payments, the lender can take back the property and sell it to recover their money. These properties often come with lower price tags, but they can also come with their fair share of complications like repair costs or legal issues. So, do your homework. Ensure you know what you're getting into before you sign on the dotted line. Research is the key. The more you know about a property, the area it's in, the local real estate market, and the potential costs associated with it, the better equipped you'll be to make a wise investment. And finally, patience. The perfect property won't just fall into your lap. It might take weeks or even months of searching, bidding, and negotiating. But remember, this is an investment. It's worth spending the time to get it right. Finding the right property may take time, but with patience and persistence, you'll find the perfect investment for your budget. So you found an affordable property, but how do you finance it? That's the question on many minds. Let's dive into some of the financing options available for real estate investment. First off, we have the most common choice: mortgages. Securing a mortgage is a viable option for many, given its long-term structure and relatively low interest rates. When choosing a mortgage, it's crucial to understand the terms. Are you going for a fixed or adjustable rate? How long is the loan term? Knowing these details will help you plan your financial journey. Next up are private loans. Now, these can be a bit trickier. They're loans you get from individuals or investors rather than banks. The benefit? Often you can negotiate terms more flexibly. The downside? The interest rates might be higher. Here too, understanding the terms and conditions is key. You don't want to get caught off guard by unexpected fees or conditions. Then we have real estate investment groups. These are essentially mutual funds for rental properties. If you want to own a rental property but don't fancy the idea of being a landlord, this could be the option for you. You'll be part of a group that buys or builds a set of properties and then rents them out to tenants. As a member, you can own one or multiple units, but the company operating the group manages all the units, taking care of maintenance, advertising vacancies, and interviewing tenants. In exchange for conducting these management tasks, the company takes a percentage of the monthly rent. In conclusion, there's no one-size-fits-all approach to financing your real estate investment. It's all about understanding your financial situation, your investment goals, and the terms and conditions of your chosen financing method. Whether you choose to go the traditional mortgage route, opt for a private loan, or join a real estate investment group, remember to do your homework. Understand the ins and outs of your agreement, and don't be afraid to ask questions. Remember, the right financing can make or break your real estate investment. Finally, let's talk about the most exciting part: making money from your investment. The thrill of seeing your strategic decisions pay off is what draws many to the world of real estate. But how exactly does one go about turning a humble abode into a cash cow? The most common way is through rental income. This is a steady stream of cash that flows into your pocket each month, like a river of gold. Just remember, being a landlord isn't for everyone. It comes with responsibilities and challenges. However, with the right property management and maintenance strategy, this can be a viable and profitable route. Another avenue is appreciation. Over time, property values tend to increase. This is the silent ally of the real estate investor. It works while you sleep, while you eat, while you're enjoying your favorite pastime. It's not as immediate as rental income, but it's a powerful force that can significantly boost your wealth in the long run. Then there's flipping. This is the art of buying low, renovating, and selling high. It's a more hands-on and risky method, but the potential for high returns is enticing. It's like a treasure hunt where you're constantly on the lookout for undervalued properties with hidden potential. Regardless of the path you choose, having a clear plan for making money before investing is crucial. It's like having a roadmap for a long journey. It guides your decisions, helps you avoid pitfalls, and keeps you on track towards your financial destination. Remember, real estate investing is not a get-rich-quick scheme. It requires patience, diligence, and strategic thinking. It's a game of chess, not a sprint, but with careful planning and execution, your investment can grow from a modest seed into a towering tree. With the right strategy, even a modest investment can turn into a significant income. So roll up your sleeves, dive into the world of real estate, and let your investment journey begin.